Okay, welcome back. Lumax Auto Technologies is the stock on our radar. The company reported numbers, and the numbers are good for the second quarter. Anmol Jain is Managing Director of Lumax Auto Tech. He's joining us right now on the phone line. Anmol, thanks very much. Good to have you with us here. Good afternoon, Prashant here. So just, to begin with, could you break down the growth in some of the bigger segments in the second quarter? Let's begin with lighting, which I think was about 30-35% of your revenues for the first half. How has it moved around? I think lighting is the biggest one. Molded parts was about 18-20%. So this has combined almost 50% of your revenues. How was growth here? And some of the other segments you want to highlight?
Hi, thanks, Prashant. So Q2 indeed has been a good quarter for us of this year. As you rightly said, lighting, which constitutes almost 1/3 of the consolidated revenues for the company, grew at almost 13% compared to the previous quarter. But if you see on a year-on-year basis, it's grown almost by 45%. Now, this is primarily because of two things. There has also been a growth in terms of volume offtake of the OEM, and also the electronic business has also grown because of the shift towards LED lighting. The plastic business, also because of better offtake from our main customers, which is Honda Motorcycle and Scooter India, has also constituted almost 20% of the total top line. So you're absolutely right that almost 50% comes from these two segments, and almost 80% of the revenues comes from these two. And if you add aftermarket and gear shifters, where we are the market leaders.
Hi Anmol, good afternoon. Have volumes normalized now post the GST disruption?
Yes, volumes are normalized post GST. We feel that after market, the offtake has been quite smooth, and I would personally feel that in quarter 3 and quarter 4, the offtake and on terms of volumes would be even far better. Aftermarket has had a huge turnaround from Q1 to Q2. We've almost grown by 38% compared to quarter 1 of current fiscal to the current fiscal quarter 2.
And what is the reason for that big growth in aftermarket?
It's primarily been GST, and also we've been having a complete new strategy in the aftermarket. As I had mentioned earlier, we've had a new brand identity launch, which was in quarter 2. Along with that, a much more aggressive product launch, a wider portfolio. So going forward, aftermarket should be growing at a much higher pace than before. And as I said, aftermarket is almost close to 15% to 20% of the revenues. So that should also give us a pretty good boost in the bottom line, because aftermarket business essentially is on a higher EBITDA as compared to the other businesses.
Sorry, you said primarily, but the primary reason was GST. I didn't quite get that.
No, I said primary reason was that in Q1 the aftermarket revenues were subdued.
Oh, okay. It just okay. Fair enough. Fair enough.
Correct. Yeah. Correct.
So, Anmol, what is the target now for the full year 18 in terms of margins? I know you have headroom all the way up to that 8.5%. Is it manageable in FY18 itself? And also, if you can want to give us any guidance in terms of your top line.
So in terms of top line, the earlier guidance I had given was always a flat growth for the current year. But based on the quarter 3 outlook, and as you know that Bajaj Auto has reported a pretty good set of numbers in October and November, and Bajaj Auto constitutes almost 1/3 of the consolidated revenues. So going forward, I don't anticipate a flat growth anymore. I do anticipate, however, a single-digit revenue growth. In terms of margins, if you see the EBITDA margins, they're already at double digits as of Q1 and Q2 of the current fiscal, and we expect these margins to even further expand in the subsequent quarters. So yes, we would be able to maintain or further grow these margins both at EBITDA level as well as the profit before tax levels.
Sorry, and revenue growth, you said 5% plus or under 5%? 5% plus, right?
It should be 5% plus. Yeah, it should be between 5 to 10%, but surely single digits. But next year we are looking at a much more aggressive growth by pumping in money, and in terms of capex in this fiscal, we should be looking at definitely a double-digit growth in the next fiscal.
The passenger car segment, I mean, if you look at it category-wise, you go across value chain, right? I mean, entry level to premium cars as well. I mean, it's applied to all of them.
That's correct.
Are you seeing any difference in trends? I mean, the luxury market growing way more slowly as compared to the entry level segment? I mean, just asking.
Well, not necessarily. So our dominance in the passenger car segment for this company is primarily on account of the gear shifter division. And gear shifter, as I said, we're a market leader with almost close to 75% market share currently. Maruti Suzuki continues to be our prime customer. Going forward, I do anticipate that there will be a further shift between the automatic and the manual transmission. Currently, our understanding is manual is about 85% of the market and 15% is automatic. However, automatic is catching up quite aggressively. So going forward, I do anticipate with this shift, because of the price per vehicle is much higher, it's almost close to 4x to 5x on an automatic transmission compared to a manual. So that should also give us a boost in our revenues.
All right, Anmol, we'll leave it at that. Thanks very much. So Lumax Auto Tech revising upwards their revenue guidance for this year from flat to single digit, say about 5% plus. But FY19 is where they're betting really big and expecting an aggressive double-digit top-line growth then. All right.